I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA Review. Today is June 10, Tuesday, 2025. Hope you had a good day today. So what did they do? They already brought it up in Asia, London. So I had an idea of pretty much buying as it continues up and then getting into this daily imbalance. This wasn't like perfect or anything, but I give a lot of examples of maybe possibly sweeping liquidity, this and that. Obviously, CPI is tomorrow, not today. And today is going to be a very fickle day. It doesn't mean it won't be a mover, but technically before any big news release like CPI, FOMC, NFP, the days leading up to it is going to be very manipulative, very difficult, but there are trades. And as you'll see, when we push up, my examples, they have to change. So obviously I don't know when I make the video here yesterday that if it's going to crack up. So, but the main point that we've been talking about since down here is that we're bullish, right? So we push up. This is that low, and then that's a high. So right, retracement because we make a new high, right? And then the projections here I talked about. See that 2 to 2.5 right there? We do sweep that previous week's high, right? So now what are they doing? Well, they want to come back and wipe out the buyers, and it's going to be very wicky, right? Let's take a look, and you can see, before I do that, you can see here, don't get lost in all this. It's not a lot. Same levels. And you'll see how that 25% of the bearish imbalance weekly, and then you'll see how the daily, which is over here, quadded here, you'll see how we end up using that too. And then once we got up here, I measured this down candle. So obviously the video hasn't printed yet, so I'm doing it now, the next day. But this candle, you project it down, you see 101.5 right here. See that? You see I'm highlighting it? 101.5 right here. And in bullish scenarios, obviously we're all the way up here. The top quadrant, I've been talking about that in the beginning of even the week, right? So they retraced back, came to the 25%, and then they tagged the bottom 25% of the daily. You see that? Let me go to a 1 minute. You can see it, not 1 minute, even a smaller time frame. You could see that when we pushed up, okay, we sold off, and it's pretty much, this is like a sell model with higher lows inside that leg, coming from there. Remember that? So this is all higher highs and higher lows, and they pretty much hold. Yeah, they'll raid, here and there, but they'll generally stay in their position as a higher low above price action, right? But what I was gonna say, so okay, you got the higher lows here, right? And then liquidity, and then retracing back down. So the projection you can see at 101.5 here, but look how we hit the we first bounced right here to the 50 of the daily, right? And then the bodies, I don't mean it bounces perfectly. I meant like it'll go through it, but look at the body. It's respecting that. See, I know it's kind of behind there, right? And then it retraces back to the top 75%, okay? Also a breakout area from here, right? If the price is down here, it's selling. So late pushers right here. And then we make another leg down to come down. So notice how we stop. We come to the 25% bearish weekly first. Obviously we get that guy, and then it reaches down to the daily level. Look at that. It's perfect, bro. And then reaches and then once it crosses over, it's in this case bullish for this candle. You see that right there, and it's sitting. Bodies are sitting there. Okay. Hopefully I'm not beating a dead horse, but that right there is algorithmic, bro. That's not like, So anyways, what do we do? Well, we make a low, right? So it's a retracement. So it's a new high and a retracement on a bigger range, right? And we're getting caught up in this bullshit, obviously, like in Monday, but they just created a sell model, but they pushed it up in Asia. So this is to show you that it's rigged, because they're, why would they give small price action for New York? And even when we get to this conversation up here, why are they giving it small? Look at all the movement that it's done outside of New York, right? And there's way more traders and way more volume moving in New York. Okay, so if that's the case, then there's your delayed gratification, because of the fact that the moves are going to be done later in the day. For example, obviously afternoon and PM. So as you'll see here, beautiful right there. Pops up, right? Makes these little higher highs for a leg, and then it sells off, retraces. But notice how the price action, look at the body sitting right there on that. Well, there's a gap above it, but more importantly, also the weekly, look at the body sitting there. It's sitting there. So it's wicking up, and this is all I'm talking about, all from over here. Wicking up, and then the bodies stay there. And then obviously the manipulation kicks in. So let's get into now the 1 minute chart real quick, and so I can frame a narrative here. But if I was to keep this simple, in the big grand scheme of things, there's a low from down here, and that's a high. Whoop. That's a higher low with 2 drives down. Okay, so now we make a high with 3 drives up. 1, 2, 3. That's the 930 high. We're bumping on that. Then it dramatically sells off for a higher low. Doesn't go below here. Even if it did, it's still another conversation. Could have been another drive to buy back up, even if we're just still bullish. But in general, look where we went to. Look to the right. Maybe I'm not. Let me just do this real quick so I can. Oh, new high. Okay. So in reality, that's the structure, right? Notice how when we bounce right. No, okay, so let me delete it. You see that, right? So that's the reason why, even if you bought this is still a buy here, because we understand that we're bullish and we're getting above new highs. We have a draw over here, as I've been saying it from the beginning. Not even this week. I was saying it last week. But how are we maneuvering? Okay, so now you see they deep right to that 25% into that rejection wick as well. See that wick? Not a coincidence. And then they're testing that low right there, because anybody who bought back up in this London time. Anyways, when we, you have so the higher low here, and then before I get there, let me go into the 1 minute now. So the smaller time frame. So we have a 15-minute inversion. Just a 15-minute imbalance right there, which I'm highlighted in the blue. It could also be refined down to a. We'll just leave it at that. And then you'll see so much to say. The opening gap, as I was saying yesterday, anything below that is a great buy, right? So what's the purpose of this? Because of that reason right there. Because they know everybody is, whoever is in a bullish week is buying. Big players are buying underneath that open, so that's why they're wicking down quickly. But the signs on the wall was the bullshit side price action. But another reason why is because it's the day before CPI. So that's just very, very, very logical. But here's the beautiful trades though. So you'll see the open here, and then we push up. We do not take out that high. So in reality, this becomes a lower low, lower high leg, and I'm going to draw it. Okay, so watch this. Just watch this for a second. You'll be able to see it. Pushes up. Does not take out that high. Okay, cool. So it comes down for a lower low. Makes that lower high right there. Another leg down. Oh, I closed it. And then obviously pushes up. Take a look. So that's still a higher low to a higher high. Here, this whole thing to lower low, lower high, to now a higher low here. And then we push up. You see that? So with that, it's fine. Checking out, sealing the 15-minute, and then we have the daily open, which is this level right here. Have the opening range gap. Not a lot of shit here, but take a look. So then it's another third drive, and it tags the 50% of the opening range gap. And also the daily. So that's why they're trying to do electronic trading 24 hours, because they want to get rid of this level and this opening range gap, which is very helpful in trading. But if you didn't have it, you're still going to be able to use the timing. We're going to probably have to manually draw this. I don't know if the indicator is going to go away or not, but but the timing is still always going to be 9:30 for the rest of our life. You know what I'm saying? It's always going to be 4:15 for the rest of our life. So we're always going to be able to have those time frames that are still used. You just indicators might not be able to follow it. Hopefully they code it to follow it, so I don't have to draw it manually. I mean, I used to draw this manually, so whatever. But the point is that it hits that 50%. Stays unsealed. In a bullish scenario, you want to see it push up anyway, because you want higher highs and higher lows to take out this higher quickly. But this is what they do. They're making small ranges also, which is very suspect. I even mentioned that yesterday with these small ranges here. But majority of look at the bodies sitting inside the 15-minute, sitting above the daily gap, today's gap. And then we have an inverse imbalance right there. We will be using that later beautifully. And then nice buy to push up. Okay, pushes up right to the back to this weekly level. And then to the left, well, it's kind of hard to show you. No, you can see on the 15-minute. We understand that this is a breakout level here too. See this breakout level right there and breakout level. But we know that 101.5 is here, and I have a projection here. I could just, I make videos long because I'm trying to teach well, but I did it. What did I do it on this? I did it on this 15-minute candle. This 330. Right? I did it on that because that's the lowest down candle, and I'm just measuring the candle itself. It's generally a nice refined range, but we have 101.5 right here up here, and then we have 2 to 2.5 up here, which we just did. But and the point is that I'm saying all this is because when 930 was, let me go back over here. Sorry, when we had this 930 area here, we were in that over here. Right, and then obviously momentum here and easy sellers. That was look at it, very fucking easy. I mean, if you look at the structure, it can't get any easier than that, bro. The point of me saying that is, I also measured this. So obviously going up is the key, but how they're doing the pullbacks here. So I also measured this last down candle, right? This 934. See the 101.5 right here. So then it's also now tapping this 101.5 over here, and the gap, but. They make a high and then they make a higher low. So retraces here, comes back into that first imbalance here. You know what? I should just let you just look at the chart, screenshot it, and look at it yourself. I mean, it's very self-explanatory. I don't need to make long videos and do this anymore. So if I make videos anymore, I think I'm going to just show the chart and keep it simple. But, it's hard to not explain in depth. But, okay, higher high, that's a higher low. Okay, comes in. First imbalance, tags that 15-minute imbalance in the blue, and then also the top 25% of the daily. See the thin line right there? It's there. That's the middle. And so I'm able to see that. That's another buy for a new high. But the reason why you want to take this profit is because yes, you want to come up here, and yeah, they may. And with a big movement like this, generally speaking, it's going to be fickle as well the next day because of all this movement that they did all in fucking Asia. I mean, you know what I mean? That didn't make sense that they did all this, and not on a New York type of time, but you'll see what I mean here. But anyways, you just got to take the profit if you're taking these buys. Otherwise, okay. If I was to count the moves, I want to just show you this for a second. Look how the 930 opened. Move 1 up. Let's just say it's a 2 lower highs to make a move 2 down. Move 3 up. Move 4 down. Move 5 up. Move 6 down. Move 7 up. But this fails. Where's my next move? Down. This is 8. I buy this. By the way. When they fucked everybody here, I bought this right here. Got out right here. You'll see it in the thumbnail. Got out right here. But that's number. Did I say 7? So that's 8 down. 9. 3 drive. 3 4 drives even. Right. The point is that when they pop up, easy sellers here. Solid candles, just beautiful. And then getting into this imbalance. I didn't draw this blue one, this big blue one that pushes through. I didn't draw it, but it's there. And then you just get when you switch up here, look where my cursor is, so don't get lost here. So when we push up. So from here, you don't, could it sell again from here? Sure. But what does it do? Then it pushes up right there, pushes up right here, right? All right, so now it's switched. And then it becomes, again, higher lows, very faint ranges and into imbalances. So 3 drives, one push up one, that's a buy, retraces back. Then a final buy, up, gets into here, all right? And that was move 9, I think I said. So that's a higher high, right? Okay, retrace back. Here. Retrace back here. This move 10. That's a higher low. This is a mean reversion from this low to this high. This is set up all by itself. And why was I selling even this here down into here? Why? Because that's a higher high. And I expect to crack. And look at the control of price right here. See this control of price right here? See how this last up candle? What is this? This 128. See that? That blue candle? See how it switches from selling? It was buying, broke, and is selling for the retrace. And you get your 3 drives there. All right? 2, 3. Higher high to higher low. Where did it? Why would I sell this down into here? My minimum target would be this first imbalance. Why would it be the first imbalance selling this? And I'm doing for real clinic today now, teaching. Why would I want to sell this into? Besides it being a higher high into a higher low, why would I do that? Because algorithmically it's going to reference that first level. Because we bust through, we come above it. Look how we bounce almost to 50% right there. But the top quadrant, this 1145. See how it comes above 1144, then 1145 opens and wicks inside it, and then it pushes off. That's algorithmic. So why, to answer the question, why am I selling it down from this higher high to a higher low, besides it being a higher high and a higher low? Because of the fact that this was too easy. And because of it being a high resistance day. If we know that it's a high resistance day and it's going to be very back and forth, right? And hunting for liquidity, very simply, hunting for liquidity, then I would expect it to reference this. Plus, once we bust above, we come above here, and then look how it comes down. Low risk buy, sell. I mean, accumulation 1, 2, finale. Look at look at sitting there on the 25%. Look at, you know, it reaches where? Well, my target was the first imbalance first, but then it stretched more to where? The opening day gap. That's why they want to get rid of, because again, remember the 930 is by the way, obviously right there too, which I'm going to explain. Well, when it's going above it and below it, all you got to do as a strategy is push fucking buy or sell when it's above or below the 930 or these levels. So they're coming back to wipe out the person who bought from above here, this level, right? Besides being all the other shit that I said, keeping it simple to higher low. So they take that level, almost 50% of the opening range gap, pops up, comes back like a ball, bounces up, bounces down, and then you can see the top 25% now getting used, and we have that 25% of the daily, which is this level right there, and then the 930s right there. Oh, they put the first imbalance at 50, and 50% is right next to the fucking 930. Notice how we're tagging that shit. No bodies in here. It's all wicks. Another push up, retrace, almost bounces on top of the first imbalance. Where in the wicks, you're buying up. By the way, this buy right here, over here, look at the lower. Look how we came down and then we wicked in a little bit. We pushed up. Then this next candle, this 1135, wicks in the candle of the down candle too, of the 1133. Boom. Pushes up. Now these are all little higher lows. See that? See how it's pushing up like that? See that? Study that. Beautiful. It doesn't matter. It's just a higher low. And you buy that for a new higher high. Drives up, retrace. Boom. You see this? And then where did we go? You don't say. All right. So I think that was move, I said 8, 9, 10, 11. Wow. Beautiful. So as it worse as it gets in a day like that. But you're going to say, oh, well, what's the structure here? Well, because, dude, this is the original low and protected low, I should say. All right, so let me do it like this. All right. So low, high, higher low, higher high, higher low, higher high. So we try to keep it simple like that, and we're using the algorithmic levels where it's going to go. Again, with it taking so long here. Oh, by the way, I didn't mention this, but I measured this down candle. Hold on, this is fired. Everything I do is fire here. This is my chart. I don't know whose else chart is where, but they ain't got it like this. Again, you might think it's too much, but when we had this bullish, you wanted to see it push up. It's not pushing up and staying above this, so it fails. Then we have this next bullish imbalance right here, this 1043. It's dragged out. Look how. Just take a second and look at it. Take a second and look at it. Well, first of all, we should have never broke this low to keep going up. Then we come down, we break. We come down. We shouldn't have this down here. This shouldn't be down here if it's going to buy. Period. Okay, then we have this bearish imbalance. See how this, watch how this works. It's sick. Then this pushes up. It bounces on top. Comes up. We're stuck at this inversion now. This is the highest inversion of that one. Body stand. Comes right back to this. Comes back up. Sweeps them. Dirty. Now you think it's really buying. Then it stops. Then it comes back to that 50 of that bearish. Pops back up to the high, and it never makes another high. So where is the best place to get in? And if you have the most obscene amount of patience and you seeing order flow, right there, right here. Why? There we go. Get into that in a second. See the bodies. Look at the bodies underneath 50% of that first inversion. Sells off. The price shouldn't be down here if it's going to buy, but it can be. But then where do you see this switch for sure? You see that candle right here? This 1129. Okay, fine. It tagged the bottom. But then look at this one. 1130. The 1130 candle is opening underneath that 50% and it shoots down. Right? Should not be here. Look what it does. Solid candles the rest of the way. What are they doing? You have to be able to know that this is suspect. The day is suspect. And I mean, you shouldn't trade it in at all anyway. I mean, professional or not, generally speaking. But only professionals should be really trading this fucking day. But you're waiting for an upset. You're waiting for order flow. And then you see what they do. They flash sell it. Right? And boom, right there. Now, you have the inkling here first, this break. And then you say, well, what if this is a lower high? See, that's real dirty. See how they do that? Then you really think, oh, that ain't going to fucking sell, even if you got in right here. But then you get your order flow, and then you use these tools, and you can see how it rushes down for boom. Oh, by the way, measured here, right? Because this was like a low, and then made a high, and then it broke. So I used that. Could I use somewhere in here? Yeah, I didn't do that. I used this. And sure enough, beautiful. 3.5 to 4 is right there. See that? Boom. Extreme buy. Very dirty on the wick side. You need a 15-second for this. And if you didn't, you'd have to use this logic here that I explained. And then as you see, we pop up and then bounce above that, and that bearish now it becomes back an inversion. Tools still get used, and then you see the measurement, the trade. I'm measuring just the candle here, and you'll see 1 to 1.5 here, and then 2 to 2.5 here. So look to the left of the chart though. If you see here, I also have this projection. Again, this 1 minute is not on this screen on the 15-minute over here because it's going to be very bulky and dirty. You know what? I will put it on for a second just so you can see also the confluence of where we're going. So again, remember 930 was in that 1 and 1.5, pulled back hard, popped up, didn't hit the 2 yet, but it what did it do? We just squeezed all these guys. Remember I was telling you about this? All right, and then we sold off. But the current projection 2 to 2.5. I could also do a projection here. Let's just overkill. I don't need it, but you'll see confluence if you do it. Do the research yourself. But anyways, once we sold off hard, we popped up to this 2 to 2.5, which is obviously now in the 1 minute. You'll see that over here. Boom. Look at the 2.5 right there. See that? Almost hitting it perfectly. And then it sold off. Right. I didn't do it. I wasn't involved in the market anymore. But let me just do it here. Looks like an obvious swing that broke. Yep. I was involved here, but that's it. I wasn't buying anymore. But you can see shy of the two. But this looks like a body projection. Let me see. The body will probably look more better on this example. There it is right there. See the 2 to 2.5? Right? Where is it coupled with? In the top half of the opening range gap that's nested with the opening day gap and the 25. You see the orange. Don't get lost. It's just the orange level with the lines. You know, if you're new, I don't know. But that's a see how he did that right there. And then I even do the projection because I think this will be my last video. Maybe we'll see if I do some more this week. But this is the last. Well, this body here, I'm gonna use this for a second. Let's just see what's up. Don't get lost with all the extra stuff now. Oh, you don't say. All right, so I'm measuring the candle itself because it has the low included. Usually you use the bodies, but this is pretty nice. 2 to 2.5. It's a new high. Again, we're as a weekly objective. I still think we're coming to hit that, but they're taking their time to do it. Who has that on their chart? Not many. I mean, maybe people do, of course, but this is just fire. So and then yeah. So and then also everything staying in the wick. Look at the body staying at 50% of this wick here. Let me see how long. 26 minutes. See that fire there. Also, I think I already talked about this. Bouncing on top here, and we're above, no bodies below the first imbalance. All algorithmic. And then just eyeballing this top quadrant of this bearish inversion. Price actions up here, and it just moseys up and pushes up, man. And then I got the midnight level. Also, another thing was if you look at the midnight level, let me take this off. Let me just put it on one. The midnight level. Take a look at the midnight level. It literally opened up, and then I think it just sank down, right? So also very very nice target if you're aiming for that, but blew through it originally. So they do it on purpose, shy of it first here, and then over here we gun it, right? Because they know they put this, they have this liquidity here, but yeah. So we're kind of dancing around that midnight level here and pushing off. So and then you got some inklings here. Originally in the 930, we had a higher low here with S&P, and we had wait, did I do that right? Oh, well, yeah, higher low in this candle here, not this low, but this low. So we had lower low. Oh, look at them pushing them up now, of course. Again, very dirty, and you expect it to be in the PM session for this shit because everybody is extremely tired. Got rid of everybody. Try to probably induce people here, but no one's fucking with them. So, but we had higher lows right there, and then from right there, Nas has a lower low there, and then from right there, Dow had a lower low there, and then at that time we had lower lows here with Dow, and then higher lows clear. So obviously looking for the buy and for a new high was in the card. As far as the selling goes, well, if I could, if I look at this careful enough, I'm sure you'll maybe see something, but it wasn't really that necessary here. Let me see. I'm not going to even draw it. I'm taking too long. But when the price pushed down, Nas makes a lower low from this low. See that? Again, this is a very high manipulation day. I'm showing how to track manipulation days, right? Like this. And then you got higher lows here, right? With S&P and Dow, right? And and then that's very clear lower low. Doesn't take out that. None of them take out that low, but but Nas takes out that low. So that right there, and look at the wick. I mean, very nice trade if you understood that the logic of what we discuss here, that was going to be example higher low. But you know, bouncing off that top 25% of the bearish also. So that's not random place, right? So that's the superpower that we got, that we understand these type of things. A blank chart, you would never know that, right? You would never know that, but you know, you would use this divergence as well. So it was also very helpful. I'm beating a dead horse. And then, dude, dollar still slithering down. And then obviously we're still slithering up. So that nothing else to mention there. And then let's see here. Again, slowly popping up, you know, and very ugly price action. And then as you see here, look at, just so you know, guys, don't trade out. You have literally empty price action in there. Look at all the wicks and gaps. Let me tell you, I come from Dow, trading Dow, and before that was forex. But you know, I can't even recognize Dow, and I've said this in a video before. The reason why is because look at it. It's back and forth. You don't even know what it is. Look at all the empty gaps. That's a lack of liquidity. So, dude, why would anybody want to trade this? It's just completely disgusting. Completely. But so yeah, those goals are still to go up. Obviously, you see, right? We're still kind of, obviously we're gonna either sell really bad from here or we're gonna really push up. So I was talking about, you know, having the first 2 weeks sell off. So maybe they got their little pump already, and then we bought up again. So what is this? What the fuck? S&P is here. They made a new high as well. And again, the show continues buying up. But what I'm going to tell you is that I have been making videos since probably September 22, I think. So you have every cycle you need. You literally have up and down. Well, before I get there, yeah, I mean, same shit, man. I mean, you know, yeah, man, you've from selling down here to then buying up videos. So you have a bear cycle, a bull cycle, a bear cycle right there, a bull cycle, a bear cycle, which I was on vacation for this part right here, and then a bull cycle. I mean, you have everything you need. So if you ask yourself, you know, even you go to my videos and I have screenshots of every 1 minute, you know, damn near 5 minute screenshots. So you'll be able to see it. And, you know, so what am I saying? Well, if you're in a bullish leg, you know how the bullish leg looks like and how to attack it and how to buy. That's how I got started after having experience. Getting better as I'm expecting these type of things. Obviously, in the bearish market, you see we're looking for lower highs and we're pushing down. You'll see that in that leg. You'll see that down here. You'll see that in these videos. You'll see that in these videos. And the push up for these videos and the push up for these videos. So, I mean, that's it. I mean, you have everything you need, to be honest with you. Yes, we do daily and we like to, you know, live price action and current days and all that. And it's fun. But I'm just, these videos are just, there's no way to really teach in short videos. But anyways, okay, this was, I don't even know why that's there anymore. So obviously the videos were originally Dow, but fuck Dow. Speaker here, look at that on the macro level, speaker there, and now we're popping up. So we're at the very highest. It's either gonna do two things. It's either gonna sell off and come back up, or it's gonna sell off for good. Not for good like forever, but I mean, you know, to come lower and we're still bearish. We don't take out these highs, which I don't see happening. Or, you know, in the general gist, we're gonna make a new all-time high, and then you know, we're gonna get some pullbacks, higher highs and higher lows, and then a retracement just like this fucking leg. Or no, just like this leg. Just like this leg. Just like this leg, and so on. Right? So they've already hit that on the continuous contract. That's the imbalance that we were trying to attack. And we did do that here, but for futures, obviously not. But all right, am I missing something here? See that right there? This open level, which we're going to it. All right, because these are 3 consecutive candles, right? Yeah, see that? See that right there? See that first open level? It's right underneath that high there. So that's this area is a nice target. And after this, again, the thing is that you're gonna say, well, that's a higher low, that's a higher high, bigger retracement. That's a higher low, that's a higher high. It's a smaller retracement. It's not 50. It doesn't come underneath. Well, CPI, now back to the conversation, CPI obviously can do anything. They're building liquidity here. They're building liquidity here. What do I see happening? I mean, again, man, I don't care. I don't know, but depending on what Asia London does, obviously. So if you ask me, I'd like to come here. Well, I mean, I'd like to come here. I'd like to see CPI knock it down here, and then I'd like to see it go back up. That's what I'd like to see. It doesn't matter what I like though, but so this could be still the leg up. See, is this the final drive up, and then a retracement? This is what I'd like to see. Or it doesn't make it any higher, it just comes down, right? And then that becomes like the high, and then retraces for a higher low, and we push up. That's what I'd like to see for the next flow. If not, again, I don't see it coming up here and being bearish forever, and then doing some crazy shit like that, where it just literally wipes out a lot of this. I don't, doesn't matter. I'm just talking. Again, CPI could do anything. So we'll see what happens after post CPI, and definitely some nice trades will be always in the market. So you guys take care and God bless.